When you put agriculture and you convert it into energy, the scale of it is massive. The amount of corn in the United States that's used for ethanol now, about 140 million tons, that's more than all the grains and oilseeds produced in Canada. I'm seeing it now on farmland that I financed 5 years ago at just over 2%. I'm refinancing it at over 4%, so it's a doubling of interest rates, and my monthly payments are higher after 5 years of principal repayment, right? Like we were saying, when we were kids in West Central Saskatchewan, if there's a drought meant single-digit wheat yields. A drought today in RM 290 Kindersley means you got 30 bushel durum yields, right? It's the technology gains, the improvements that we've got is just unbelievable.
From the peak of Saddle Butte to the depth of the LaPorte Slough, this is the Trent Klarenbach podcast. Today we have a reoccurring guest. His name is Shaun Wildman, the pride of Flaxcombe, Saskatchewan. He is here for his second time on the show. Shaun has a history in the grain trade, which maybe he can elaborate on. Shaun Wildman, welcome to the show.
Thank you, Trent. Thanks for inviting me back.
Yeah, it's great to have you. And I mentioned those emails you sent me with those, I call them thought exercises. I love being challenged with my ideas, and I think today's conversation is certainly going to be one of those. So I'm looking forward to it.
Yeah, absolutely. I spent a lot of time preparing. I'm hoping I look good. I prepared my hair and parting it left to right instead of right to left like I did last time. So I'm ready to go.
Yeah, you might get some modeling contracts after this conversation.
Sweet.
Yeah, so interesting. You sent me an email here recently. We were talking about your vision or your idea, the stability of farmland values going forward, the idea that they're going to continue rising for the future in response to a lot of factors outside of inflation. But you talked about productivity and yield gains, and also you mentioned the expansion of the renewable fuel industry, which certainly all those have been just a certain game changer from the time we grew up. Where would you like to start?
Well, I think I'm, like we were talking about earlier, I don't know if I'm naturally inclined to necessarily be positive about things in life, but if you look at agriculture, man, there is some unbelievable successes we've had. And I think it's just actually to talk about human capital or human ingenuity, right? Like we were saying, when we were kids in West Central Saskatchewan, if there's a drought meant single-digit wheat yields. A drought today in RM 290 Kindersley means you got 30 bushel durum yields, right? It's the technology gains, the improvements that we've got is just unbelievable. If we go back to the 70s, there was this talk about population exceeding the ability to grow food. No way. If you give human capital, human ingenuity an opportunity, there's going to be hiccups, but we see this in every annual crop in every region of the world that has access to capital. The trends are higher. So over our lifetime of a little over 50 years, if you go back to the early 70s, production of wheat yields, bushels per acre, is double in Canada, United States, Europe, everywhere that's adopted modern farming practices. The same applies to rice. So different geography, different agronomics. Corn is actually up about 150%, the yields bushels per acre in that same time period. And I think that's one of the reasons why I'm not necessarily, in terms of me saying that I think farmland values will go up. They could go down this year. They could go down next year. There's certainly some challenges in current margins. It's hard to make money growing $7 durum with your cost figures now, but I think we'll get that figured out. And there's a portion of, if you're a canola grower growing $16 canola, and what is it you pencil in if you're in eastern Saskatchewan for canola yields? You're probably plugging in 50 bushel an acre as your most likely yield through technology gains, etc. And it's really impressive. And so you could also buy into this idea that we see in popular media, mainstream media right now, where if you Google right now, farm yields, climate change, whatever, you're going to find some story about drought. You're going to find some story about crop failures in the United States. You're going to find some story about starvation in Africa. And those things are true, but they're isolated. You're not really capturing the overall trends. The overall trends are that despite the fact that temperatures during our lifetime, global temperatures are up 2 degrees Celsius, yet we've seen 100% gain in yields. So if you look at it, if you just say, what is the impact of climate change, of global warming? The impact is a positive correlation between the yields and global warming. But it's not because of global warming. It's because of technology and human capital, right? It's because we've innovated. And I think there's many variables that go into producing a crop, but just don't. It's sort of like the same thing that Warren Buffett has said about the long-term opportunities in the stock market. Don't bet against human ingenuity. And I think the same thing applies to crop yields. But so the counter to that might be we're going to produce too much food at some point in time, right? We're going to be overwhelmed with it. And the reality is that population growth has roughly doubled. The global population has roughly doubled during our lifetimes, but it's slowing. And in fact, we actually have a issue with declining population in China now, right? This one child per family thing they want them to have more than one child now because and actually it's the same thing everywhere where you've got sort of advanced economies is populations are no longer growing. But you know what we've been doing is renewable fuels, right? And you and I talked a bit about that, and holy camoly, the opportunity to consume food for fuel is massive. And we've already seen that starting to happen significantly.
Yeah. It is fascinating how things have changed. I remember when I started in the oil field, Shaun, there was this talk about peak oil that was in every headline, peak oil. And I just remembered a quote, and I forget the individual who it was attributed to, but it was regarding food, but I applied it to oil, is with every new being on this earth, with every new birth, there comes that requires food. There's a brain that is used to determine how to feed it. So basically, human ingenuity, we believe in that, and we don't have peak oil anymore. That's not a concern. The attention you've brought, or the stats you pointed out about food, we're doubling our food at roughly the same pace as population growth. It's amazing. And yeah, those technology advances that we've experienced, it's quite remarkable, like how farming has changed from where you and I grew up, farming practices. We were seeding half and half throughout most of our childhood. And that changed probably in the early 20s, our early 20s. And all of a sudden you weren't losing $55 an acre on half your farmland. You were maybe breaking even or maybe making a profit. It makes quite a difference to the final numbers and the value of farmland.
Yeah, no, I guess to bring it down to a more local or provincial thing, when you talk about summer fallow, like how much did we summer fallow in Saskatchewan 30, 40 years ago? I think it was close to 15 million acres, 20 million acres out of 50 million cultivated acres, like a third, 40%. And now we're getting better yields every year, not every second year, right? That just really speaks to this technology and our ability to innovate. And that's one of the reasons why I'm positive longer term on agriculture, Canadian agriculture. And I think that's going to support Canadian farmland values. That doesn't remove the potential that we don't see weakness in the shorter term, because there's all sorts of things. To be honest with you, probably my biggest concern would be increasing interest rates. I think that's a bigger factor. If you look at the early 80s when land values peaked in Saskatchewan, interest rates were 15%, right? So if you're that peak for cultivated land values in West Central Saskatchewan are $1,000 an acre, that guys paid as high as in the early 80s, that was $150 an acre interest they were paying when your friggin' cereal grain yields were 30 bushel an acre, right? Like, how could you handle that, right? It was a lot worse than it is today in terms of those economics when you're doing debt financing, for sure.
Yeah, and that's the topic of the second part. That's the topic of the second part of my margin call series is interest rates. It hasn't been published yet as of this recording, and it's not always so much, and here's my belief on it, even though interest rates are lower right now, they're not 15%. It's the percent change in the rates, basically, is what the factor is. We've seen a doubling of rates, what some guys are telling me, roughly a doubling of rates the last 5 or 6 years. That's significant. That's like going from 15 to 30%, essentially. And it has if you haven't budgeted for that, it's a similar impact on your operation.
No, you're right. People that were aggressive over the past 5 years, if you were making things work with a 2.5% interest rates and you took some pretty high leverage, the math is pretty compelling what that's going to do to you. I'm seeing it now on farmland that I financed 5 years ago at just over 2%, and I'm refinancing it at over 4%. So it's a doubling of interest rates, and my monthly payments are higher after 5 years of principal repayment, right? That's absolutely true. Although I would say, man, 5 years ago with interest rates close to zero, it was just a friggin' really, rather than it being bad today in terms of with normal ratios, I would say it was just unbelievably good 5 years ago, right? But yeah, if you maxed out if your farm was making sense and your debt was making sense and you'd maxed it out 5 years ago with I don't know, 80% loan to value on everything, you're going to have issues today, for sure, right? You're absolutely correct. Although I would say if you look at the composite of Western Canadian farmers, there are some significant farmers, and they're all in the headlines right now, that have some pretty high debt ratios. But overall, man, there's a lot of farmers that have pretty good ratios, right? So it's just looking at those collectively, what's going on.
Yeah, collectively, and where the margin is. So, yeah, there's obviously there's some no debt, there's some extremely leveraged operations. There's a mix in between. What do you think? What age group or what demographic do you think? You mentioned there's a lot of healthy farms. What demographic do you think that would be?
Obviously, if the guy that owns the land or the lady is older, they probably have less debt. Although I don't even know, I break it down further because most farms are family operations, right? And multi-generational family operations. And most of them are corporations as well. Like, it's not Bob and Bill and Sally, the 3 generations. It's BYS Corporation now. But yeah, maybe some of the younger guys that were aggressive and they got the benefit of their their dad and their grandpa's equity built into it. But if they went from 2,000 acres 15 years ago to 30,000 acres today, and a lot of that was recent, yeah, you're absolutely, your exposure is a lot higher, right? But I also know family farms that own 10,000 acres and have zero debt, right? And it's that that may be the exception, but they're out there, right?
Yeah.
So it's, and actually, to be honest with you, I would say I know a few guys that have got into farming, and this is really an exception, but without family help. And it's pretty unusual. And how can you do it? Because farming's so capital intensive, and really in terms of the margins, good margins on farming are bad margins in most industries as a percent of asset value, right? It's not like technology stocks where it's not like Amazon where you can lose money for 15 years, or Tesla where you can lose money for 15 years because the growth is so phenomenal. And when things click, your margins are going to be unbelievable. Really good farming margins are, what's a good farming margin is you got $3,000 an acre land and you made a $200 an acre profit or whatever. That's pretty good, right? And that's, what is that, a 7% profit margin, right? So it's, but it's a safe asset, right? So it's relative to these other industries, it's safe, right? And that's why the yields tend to be lower.
Right. Yeah. Yeah.
But if we go back to this renewable fuels thing, I guess on my positive take on things today, what is positive? The new renewable fuel standards in the United States. So we talked about this a bit. When I look at the USDA supply and demand estimates for the coming year, and we went from a surplus situation in canola. We still got lots of canola stocks right now in Canada, but man, the demand ramp up, and now that China's importing canola seed again as well to take that portion that isn't being crushed, there is a real potential, if legislation doesn't change, that we're in a deficit in North America for veg oil like we were a couple of years ago when canola went to $20-some a bushel.
Wow.
Yeah, so it's, but the trick is that it's legislation, and when you're relying on legislation, it's always scary because that's sort of getting baked into today's values, right? And higher prices probably could be as well. It's vulnerable to a change, right? If we can't come up with, the renewable diesel guys in California can't come up with enough vegetable oil and they have to shut down, or they can't make their blend mandates, then they're going to push for legislation changes, right? And then we've taken 2 steps forward and we take 1 step back. But if you go back to when ethanol mandates first happened in the United States, I was just looking at it this morning actually, and we went from zero corn use for ethanol in the, 1990 to roughly just after, I think it's just after 2010, we sort of hit that blend wall of E10. I think 11% of the blend right now is about 11% of gasoline is ethanol. And so we've run into sort of a blend wall where you can't use more ethanol. So we can't use more corn for ethanol. It's a technology issue, but you don't have that in renewable diesel. So renewable diesel, as opposed to standard biodiesel, has the same functionality as diesel. It's not like biodiesel used to be, you put biodiesel in, you couldn't use it in the winter because it was like putting vegetable oil out in the minus 40 weather to get hard, right? And it'd plug up. Renewable diesel has the same functionality. So you can put renewable diesel in your tractor or your semi and drive in minus 30 and it'll work. So there's not going to be this blend wall. You could have, if we had the feedstock for it and we had the legislation and the willingness to force this higher cost product, we could use 100% of our diesel could be made from canola oil or vegetable soybean oil or whatever. So it's, Yeah, I think these renewable fuels legislation, they're going to be pushing 2 steps forward, 1 step back when you run into a technology issue or a profitability issue. And that's one more thing that sort of makes me positive on the long-term potential for agriculture in Canada.
Well, I agree with you. I think I remember telling the guys in the coffee shop at breakfast Sask Power should be using wheat to turn those turbines instead of coal, right? Just because we had $3 wheat or $4 wheat at that time. I think if you can get away from that reliance on fossil fuels and get into something renewable, like my stupid example is wheat or canola or corn, reduce your reliance on fossil fuels. And like, how many wars have been fought over oil in the last 20, 30 years, right? I would say oil's been a factor in quite a lot of them. Why wouldn't you want to produce your energy in your own country and grow it every year? I think it's definitely a no-brainer. So I can just see that getting more and more growth in that industry going forward, which obviously is good for the producer.
I think there's a domestic example here as well in terms of the kind of that we're doing that in Canada. Imperial Oil has just recently commissioned this renewable diesel facility just outside of Edmonton, and if they're running on all cylinders, they're going to need more than 10% of Canada's canola crop, the oil extracted from more than 10% of the crop, to fuel that. So it's, wow, these just, when you put agriculture and you convert it into energy, the scale of it is massive. The amount of corn in the United States that's used for ethanol now, about 140 million tons, that's more than all the grains and oilseeds produced in Canada, right? We produce about just over, including Eastern Canada, just over 100 million tons of grains and oilseeds. And they're using something like 140 million tons of corn for ethanol in the United States. That's at a 10% blend. 10x that if you wanted to make all the gasoline from grain, and you need 10 Canadian crops, right? It's just, if there is an interest in converting and making more renewable fuels, if we don't need to feed more mouse because population growth is stopping and we do have extra grain because of all this productivity gains, I think we would continue to find ways to turn it into energy.
Yeah. Oh, I think it's just fantastic. And I cannot think of a more significant impact on North America and worldwide grain prices and in turn land values than the corn ethanol mandate in the States. And this is a function of that, and it's growing.
It's pretty significant. I wanted to mention, Trent, so if you look at this renewable fuels thing, which the vegetable oil comes from the seed, which has to be crushed. We've expanded our crushing industry in Canada. We've got about 15 million tons of crushing capacity. We won't use all that, right? You tend to run at about, even when margins are good, there's shutdowns, et cetera, that probably shut you down. You really only will crush 330 days a year, right? So you get about 90% of that if things are banging on all cylinders. But the margins are really good right now, crush margins, but the basis levels that farmers have are terrible. So I hear frustrated farmers all the time and about how the basis sucks and it's 50 under, and hey, I heard this guy in a podcast say the margins are good. Like, why won't buyers pay us more for it? Although the flat price, $16 a bushel, is actually pretty good, I'd say, for canola, but the basis levels aren't that sexy. And how are we going to add value to farming? Should we put $1 billion into Churchill? Is that going to help us? Whatever. Here's an easy one. You've got lots of farms, not lots of farms, but there's a few farms in Saskatchewan that are 30, 40, 50,000, 100,000 acres. At that scale, why don't you buy yourself an elevator, get it licensed as an ICE delivery location, and deliver against futures? You don't like your 50 under? You know what? Sell November futures with the intention of filling up that elevator and delivering against futures, and then you're getting a zero basis. Now, it's a little more complicated than that. You're going to have to get someone to lend you money against that inventory, et cetera, so you don't have too much capital tied up. And it's complicated, especially with the ICE exchange no longer in Winnipeg. You're going to have to talk to somebody in somewhere else in the world, London or wherever, right? There's a lot of rules around it, but really, if I had a 40,000 acre farm, that is one thing that I would be planning on doing, is finding myself a cheap elevator that's on rail. And because there are cheap elevators right now, grain handling margins have been pretty poor. And I'd be getting that license for delivery against futures. And if I don't like it, if we have a good crop and the basis is 70 under this harvest, just sell the futures and stay short. And if the November goes at full carry to January, then buy the NOV and sell the Jan, and you're earning your carry, right? And that is one, I don't know if I'd call it a low-hanging fruit because it's a little bit complicated, but that's something that I would be looking at as a bigger farmer, I think.
That's interesting. There's likely some facilities available, and just maybe not in every geographic location. I guess that'd be the challenge, wouldn't it? Be lining up those availabilities of those elevators and
Yeah.
the farming operation. But yeah, I like the idea. I love the idea.
Yeah, that's more of a sort of long-term planning, but
Yeah. I like that.
but I see that as an opportunity.
Yeah. What other opportunities do you see out there?
What other opportunities? I don't know. I guess I talked with you before about my general philosophy that over the long terms that markets create wealth, and whether it's farmland or it's stocks or whatever, if you're in it long enough, that time is your ally, right? And that's the beauty of compounding, and just make sure that you're not too leveraged, right? See, your point that you make, there's some guys that took on too much debt, and we're seeing some bankruptcies, and if grain prices don't go up and there's some bad crops or whatever, we could see more bankruptcies. But in the long run, I go to these investment conferences, I go to these farmland investment conferences. I remember sitting beside this big investor from Texas at this farmland investment conference that I was at in Iowa this year, and I asked him, when did you get into it? And he's, I bought my first piece of farmland, I think he said something like 1987. I'm like, wow, that must have been a tough time, right? And he said, his response was, I wish I wish I still had that land. I wish I had every piece of land that I ever bought. And you could say the same thing on any blue chip stock or whatever. So again, I guess it comes down to time horizons. And if you've got a long enough time horizon, and if you've got some capital behind you, and you've got a decent something that's not too crazy, it's going to work out probably, right? But don't get yourself too highly leveraged in the short term, because you might win, and you might win really big, but you might go under before you win.
But you can, when you're leveraged, even if you're not leveraged, you can be right on the direction and still lose money. Those pullbacks are really difficult to sit through because you don't know if they're going to come back or when, right? But to your point, the market's just, it's been a wealth creation in whatever market that's been. Not everything has gone up and stayed up, but Amazon, what do they talk about Amazon? It's dropped 50% in value I forget how many times since it's traded publicly, and it's been an absolutely rock star of an investment. But you had to hold through those 50% pullbacks, and there was multiple of them, like one a year for I don't know how many years. It's very difficult to do. And even if you're 50, I'm 55, right? 54, so I'm more risk adverse now than I was 20 years ago. Absolutely. And the older generation certainly is too, right? So it's just interesting how that plays out. So
Yeah, I think if you've got finite resources and you've got a finite timeline, i.e., I have $3 million of equity in my farm and I want to retire and I want to give some money to my kids and I want to have enough money to tide me through, then you want to be cautious, right? But if you got 30 million bucks, I don't think it's just an age thing either, right? If you've got enough capital, the general rule that financial planners will tell you is if you're a certain age, you want to reduce the risk in your investments. But it really depends what you're doing. A lot of successful farms have enough capital now that you're not saving money to give Billy and Sally $1 million each to get them going. It's the estate, right? It's a matter of your estate. And if you put your money into super conservative investments to make sure that it retains value, I guess you're gonna maintain that $30 million if you put it into T-bills or Government of Canada bonds or whatever. But man, you might be giving up a lot with the total return on public markets. It's averaging 9% a year, right? It's they're doubling in less than every decade. So it's what is your goal and how much can you risk?
yeah, that's always it. Basically, I've always felt your success is not determined by how much you make, it's how much you do not lose. And your time frame and time horizon, as you say, it's different for everybody. No two situations are the same. Yeah, you mentioned, you can get some notes here about Churchill. You brought that up earlier, $1 billion for Churchill. Got some thoughts on that?
Churchill, I've been involved in some consulting with Churchill. Would be one of the last people involved in exporting through Churchill when I was with Seaboard Corporation. That one didn't go very well because Omnitrax, the manager of the port, embargoed the exports, locked them out, so we couldn't load out of there because I guess the government subsidies got reduced. But if you look on a map, it looks great that we've got this place that's so close to Europe and it should work. And it can work in the right scenario. When you had the CWE monopoly, they pushed 1 million tons of grain through there every year. I think part of the reason that the board would have done that was actually to force the other ports to be competitive, saying, hey, we've got alternatives, right? It wasn't necessarily that this is the most economical, that this particular 40,000 ton sail through Churchill is going to in itself add more value to the wheat pool than a 40,000 ton sail through Vancouver or Montreal. Rather, it was posturing so you could force other ports to be competitive. The other thing that the board could do that private people can't do now is if you're pushing wheat through Churchill, which probably is the commodity that works best through there because we do proportionally out of the crops that we export, they all want to be pushed through Vancouver naturally through the West Coast, the majority of them, but wheat would have the biggest percentage that would want to move east rather than west out of the other commodities. But you're selling a spec wheat, right? You're selling, if you want to go to Europe, you might be selling a 113.8 to UK mill. the wheat board had every ton of wheat in all of Western Canada to draw from, right? So they could make sure that they collect a number 113.8 in the closest geography to Churchill. Well, if you're Bunge or Richardson or whoever, you don't own 100% of the Canadian wheat. You can't call out eight cars from this station and 9 cars from that station and just make sure it all works. So you're probably going to be over applying quality when you're trying to do 40,000 tons of number 113.8 through Churchill. It's a pretty tough situation. And there's a reason why Churchill hasn't exported. When we deregulated the CWB, the monopoly, when we got rid of it in 2012, 2013, the federal government kicked in, I forget how many dollars, but basically it was enough where you could put where your elevation was zero at Churchill. So Churchill would charge you $10 a ton, you get a $10 a ton rebate. And even with that zero elevation at Churchill, and this is private industry, no philosophy about which way grain should be going or should we try and support the northeastern Saskatchewan farmer or whatever, that movement of grain through the port of Churchill would stop when that zero elevation ran out. It'd go up to that point and there would be no more. So that tells you how difficult it is. Now, I will say that a rising tide lifts all boats. So if we go back to 2013, 2014, I think it was, when we saw the Western Canadian crop jump 30% from 60 to 80 million tons in 1 year. And the ports got overwhelmed and there was a bottleneck, and our published elevations in Vancouver were $18 a ton, but the next sale would make you $60 a ton if you could do one more sale at Vancouver because it was so restricted. Churchill would work then, right? Because you could, those inefficiencies, it just other locations would work. It would make things work. But if the federal government's going to invest money, they should probably be looking at putting more money into West Coast grain infrastructure, because that's really where the growth is. And you can access European markets out of the West Coast as well with the bigger vessels.
So we're not going to see Churchill likely become a player in the early
Well, I don't know. If there's a political will, I guess it can, right? But it's not going to be easy, in my opinion.
Yeah, and it's not rail line, it's slow rail line too. It's going across muskeg and swamp, and
yeah, it's a slow rail line.
Yeah.
So
Yeah.
it's restricted. But maybe there's a play there. Maybe there's a play there on energy. Maybe there's a play there if one farm owns all the land around the Paw and into that region of eastern Saskatchewan, northeastern Saskatchewan, and when you direct it all that way, I don't know, but it's certainly not a low-hanging fruit, in my opinion.
Right.
In terms of opportunity.
So it's more of a sentimental thing for farmers to rally behind, maybe, and some political rally behind it.
I think so. There's general public support to make Churchill work, it seems. So there's lots of interest in that, but it's a tough one in my experience. Anyways, it's a tough one to make that work in my experience.
Yeah. Sometimes there's misalignment between what we want and what's actually practical, right?
Yeah.
You also have a note here about Canadian grain handlers and their margins compared to the crushers. They're not
well. So I mentioned that the crush margins are really good on grain. I think this is maybe a public misconception that you hear from lots of guys like And I mentioned about the basis levels being bad on canola, but the grain handlers are not making a lot of money exporting that canola for you either. To be honest, like if you, especially with increases in rail freight, and if you look at where export premiums are, the handling margins have been terrible. And the obvious proof in that is the failure of so many companies in the last few years of grain handlers. If you look at Northwest Terminal was a well-run facility, and they just couldn't make a go of it because margins were so tough. And now it was absorbed into Bunge. And some of these grain handlers they expanded capacity, but they've actually shut down some of the smaller facilities as well at the same time, right? So I think the big thing about reduced grain handling margins is there's a whole bunch of links behind it, but the big one is when I mentioned that I think it was 2013 where we saw this production jump at 20 million tons and there was major congestion and grain handling margins were unbelievable. And this brought in new entrants into the Canadian market. At the same time, the wheat board monopoly was eliminated. So your typical capitalist thought, oh, well, I can make a whole bunch of money now because I'm not dealing with this government monopoly. So I'm going to come in. And G3 would be the biggest entrant that came into Canada. And they built a port facility in Vancouver. They built a whole bunch of inland grain elevators. And at the same time, we had a couple of years where grain yields didn't increase. We had a couple of droughts. And we had the expansion of this crush industry where it's not going through those port facilities. So it's all combined to reduce grain handling margins. But again, if you go back to these long-term trends where we're roughly increasing our yields at about nearly 1 bushel per acre per year of wheat, roughly over the long run, right? So if you take that number, Western Canadian production, we should be adding more than 1 million tons per year to Western Canadian production. So what does that equate to? That's 2 big inland facilities if we were at full capacity. Or, I don't know, what's a new West Coast port facility? Maybe 5 million tons. So that'd be over 5 years, we would need to add another one of those if we were at capacity, right? So because our domestic growth, our domestic consumption isn't increasing other than renewable fuels. Now, that is going to be increasing, right? So that'll, out of that 1 bushel per acre yield increase per year, some of that's going to be gobbled up domestically if we see more renewable fuels using our grains and oilseeds, but the vast majority is going to be forced to be exported, right? So at some point, this overbuilt capacity, this efficiency that we've added to the Canadian grain handling system is going to be maxed out again. And at that point, we're going to have to start building again because of technology and growth and yields. It's going to continue. It definitely will continue. And it's going to be, but it's the same thing. It's 2 steps forward, 1 step back, right? We had record production last year. Maybe we have another problem this year. But if you draw the long run trend, it's bumps and jumps and up and down, but the long run trend is up. And that's consistent everywhere in the world that grows annual crops and uses modern technology.
Right. Yeah. And there's probably some parts of the world, some geographic regions where they have the opportunity to increase that more than 1 bushel per acre over the next 50 years.
Yeah, probably. I think, in my opinion, the biggest potential for production gains is probably in Africa. If you go to a place like Ethiopia that's fertile, why aren't they producing more and exporting more? It comes down to civil war, infrastructure, lack of capital. Russia is a massive exporter of grain, but when I was spending a lot of time in Far Eastern Russia, which has less rules and infrastructure, and I would drive and I would see all this grassland, and I'm like, why are they not producing grain there, and they're actually importing it. One of the people that I dealt with there, his job was importing meat from California. And I'm like, you've got all this grassland, yet you're importing it. Why is that? It's because they don't have the rule of law. Because to get something built, you have to bribe a local guy. What multinational is going to invest money and improve it in building a port facility? What farmer is going to try and get their grain to market in far eastern Russia because the road didn't get built because a local governor was thrown in jail for bribes? Because you need corruption and lack of law is a major inhibitor to economic growth. And yeah, so regions of the world that don't have that are not going to see these productivity gains. Now, Russia is seeing massive productivity gains there, but this Far Eastern Russia was sort of an exception. And that was 10 years ago. I don't know how it is today necessarily. Maybe it's different, but that was my experience then.
Yeah. Yeah. And Russia's such a large, massive country, right? It's massive. So this is a similar point. My neighbor across the back alley, my house here, he bought a acreage. Young guy, so he bought this Massey 35 tractor that your dad would have maybe had, perhaps, right? And a small horsepower tractor. Basically, we would use it as a yard tractor. But Massey still makes them over in India. They ship them to India. That tractor is still in production to this day, and it's for agriculture purposes. So there's some great opportunity around the world, not just in Canada, and I find that kind of stuff interesting. How capital transfers and from one place to the other, and it gets sticky in North America, and it's not so sticky in Eastern Russia or Africa or Ethiopia for that matter, right? Yeah. It's interesting stuff. So, yeah, okay, so I was at breakfast in Saskatoon here. The federal transportation minister was speaking at it. And one of the topics discussed was the Narrows Bridge in Vancouver, Shaun?
Yeah.
And the limitations that poses on exports. Are you able to talk to that a bit, or you lived on?
That ties in with what I mentioned about if you're going to put money into infrastructure rather than putting it into Churchill, and I think that actually was part of that discussion you're mentioning. One of the speakers there said to put it into the second Narrows Bridge. So a lot of your export capacity is on the North Shore. It has to go over water, and you're restricted to this one rail line that is. So there's some major congestion there. I don't know what the cost would be to expand that, but there have been efficiency improvements. But yeah, the demand right now we have enough capacity in Western Canada, although we don't have it all the time when we want it, right? We don't have, we might want to move 1.5 units of grain in October and we can only move one. It gets moved throughout the 12 months of the year, right? We don't have burdensome carryout because we couldn't move enough grain. It just happens to be we couldn't move it when the farmers wanted to move it, right? Or in this case, the fertilizer companies, or I think that was one of the fertilizer executives talking. So they can't move it when they want. So yeah, I think if you look at it, the growth in demand has been Asia, right? Europe is an export competitor now, right? They're also an importer of ours, but they're really an export competitor. So the East Coast facilities were built for Europe when they were in a production deficit. Post World War II, there was famine, and they had government programs, or Canada was supplying them. Longer than that, Canada was exporting. But if you look at it today, if I take these port facilities in the St. Lawrence, this is a real easy way to look at it. You might turn a port facility, so fill it up and empty it, 3 times in the St. Lawrence. In Vancouver, it's going to be, I don't know, 25 times or something like that, right? It just, the number of turns. So the demand on the infrastructure is so much greater on the West Coast because it's all about demand growth in Asia, right? Which is going through Vancouver. And now, because this Vancouver port facility is in the middle of the city, that makes it pretty tough. And that's TP access, right? So you've got Prince George, which isn't in the middle of a city, but it's CN only access, right? But yeah, that's a good example. Is really the demand growth has been Asia and will likely continue to be Asia.
Which, from an efficiency point of view, isn't shipping to the West Coast, despite the challenges, Second Narrows Bridge, for example. Isn't it more efficient than shipping to the west than shipping to the east with all the different unloads and reloads on the St. Lawrence and Thunder Bay and whatever? You would know that better than I do, but my understanding is it's not just rail line to boat, it's rail to boat to...
Yeah, I don't know if I'm not sure I'd characterize it that way necessarily. I know if you look at Thunder Bay, now Thunder Bay is draft restricted, right? So it can only, you've got a restricted draft, so how deep the water is, and you've got to go through the locks as well. So there's restrictions on the beam, the width of the vessel, the length overall. So you can only load about 20,000 tons in Thunder Bay. But I will say from a port facility, those guys want to work there. There's no strikes. They know that they are fighting to get their share of the business. So they're not like on the West Coast where there's strikes and labor disruptions, et cetera. They want to work. Now, yeah, I guess there would be inefficiencies because if you look at Thunder Bay, it's draft restricted. It's you can only put it on smaller boats. To get to the St. Lawrence, typically the way you do it, because it's such a long move on rail, is you're actually putting it into Thunder Bay and then you're transporting it on Laker vessels that are just made to move through the lakes into Quebec City or Port Cartier or Montreal and transferring it into those elevators. So there is some of those inefficiencies or extra moves as well, right? So yeah, I guess I will say the other thing, back to Churchill, it's got some challenges, but man, you've got a group of people up there that want to work and want to do business, right? They know that they don't have a monopoly, that it's not easy, and that's definitely one positive, is the interest here. If you put stuff through Churchill, there's not going to be a strike to block you. The strike might be on the corporation that's trying to exploit more money from the federal government, but it wouldn't be from the workers.
No, so is the margin that tight? That $10 subsidy is, I guess it's obviously the line in the sand for the company, but is it that tight? Is it that expensive to ship out of there, or is that just the incentive to use it? They have an asset set empty if they can't make money out of it. Is one thing I ask.
What's to add some context, $10 a ton, how much does a grain company make now by loading grain in Kindersley, Saskatchewan, putting it on a rail car, loading it in Vancouver, cleaning it, blending it, doing whatever they do? What I call the pipeline, which is an all-in gross revenue from which you've got to deduct your staffing costs and whatever value you want to assign to that portion of the billions of dollars assets you had to buy to make that happen, right? You need to make, so it's not a profit, but what I call pipeline margin might be for handling grain and oil seeds from Saskatchewan to the West Coast, interior rail incentive rebate, whatever is, I don't know, it's anywhere from $25 a ton to $65 a ton, depending upon the time of the year and the commodity, right? So if you can if you take that $10 a ton, that's a pretty significant chunk. If you gave an extra $10 a ton to Prince Rupert, for example, they would be figuring out ways to push more grain through that port facility for sure, because that'd be pretty significant.
Yeah. Yeah. Interesting. What are we missing on the conversation? Any hot topics you want to get touch on, or should we leave that for another day?
I don't know. I think we covered everything. I'm second guessing myself. Hopefully I didn't say anything that hurt anybody's feelings or whatever, but
You don't worry about the audience. You produce for you. Audience comes last, Shaun. Audience
Okay.
comes last.
Yeah, no, that's good.
Yeah, this is good. We're approaching an hour, and I think initially you talked half an hour, so I got you for an extra 25 minutes. So.
All good. I appreciate the invite.
Yeah, this is great. And we'll do this again sometime, and keep sending me your thought experiments. I thoroughly enjoy them. I like being challenged. I'm not satisfied with the status quo either, so I look forward to them.